Good morning, Tasty Nation. Mark Trader here. Wanted to give you a quick update and also why I am a tastytrade, tastyworks fanboy. I'll admit it. All right. So I'm so used to the platform that I didn't even bother to look at their web-based version. Tastyworks. For those of you, and this is another reason why I think they're such a class act. So in your email, if you have a Tastyworks account, if you don't have a Tastyworks account, let me know. I'll get you a link over there. But in your email, especially if you have an IRA, you should have got an email that looks something like this. So tastytrade, tastyworks, the guys there, Tom, Tony, Liz, Jenny, Vanetta, the whole crew, just totally legit. So let me show you what's going on. If you have an IRA account, so there's a fee involved, not assessed by tastyworks or tastytrade, money the brokerage house. Okay. Oh shoot, I can't. I gotta go back to zero. But as you can read, you should get an email like this. There's an annual IRA maintenance fee charged by the trustee, which tastyworks and tastytrade are not. So there was an email earlier saying all of those anybody with an IRA account would be charged a $30 annual IRA maintenance fee. So then I get this email and it says, if you have an IRA account with tastyworks, we'll be reimbursing the $30 fee charged by the trustee. So again, so they're eating that $30 for you. The trustee is still getting the $30. Tastyworks is paying the $30 for you if you have an IRA account. This is per IRA account. Okay. Further, going forward, there will be no more annual IRA fees. So they're not even going to, they're going to eat it. Okay. They're going to either eat it or they're going to have a, they're going to eat it or they're going to have a understanding with the trustees for IRA accounts, for tastyworks accounts, that to no longer charge their clients for that. All right. So this is another reason why I am a tastytrade fanboy or tastyworks and a tastyworks fanboy. And this is just a class act. You know, there's something to be said about integrity. You know, you can't, don't fade integrity, right? When you come across a company or an individual that always gives you the benefit of the doubt and always puts you first and just has some class. And the funny thing about money don't buy class, all right? I know a lot of people with a lot of money and they have no class. But integrity, character, that's what you want to look for, and it's rare nowadays, unfortunately. So when I come across something like this, I have no problem not being shy about it. Now, another thing what I love is I've been demonstrating the new tastyworks platform. Okay, it's a downloadable version. It's free. I mean, you open up a tastyworks account and it's free, and you can download it, and every time you open it, it doesn't update, and it's fast. I love it. I trade a lot, so I like the speed. But so I didn't even bother to look at the web version. Now, the web version, because as I was teaching my clients, this is great, but the old Dole version had stuff that I really like. And silly me, all right, I did not look at the web version of tastyworks. And this web version, if you're not going to be making a lot of trades, if you're just an average trader, even if you make a lot of trades, it's just sick. All right. So this is the tastyworks web version. You log into your tastyworks account, and on the top left, you'll see trading platform. Click on it, and then it'll launch you to the web-based version instead of clicking the program that's on your computer. And if you look at it, it looks just like the old Dole. So here's what I love about it. You got your toggle switches back here. You can see the percentages, all right? And one of the things to talk about today, this is a standard, here's a standard golden gecko, all right? Closer to 45 days to expiration, and here's your standard golden gecko. And it still memorizes your stuff. So I can clear this, and if I want to put one on again, you can just go to strategies, go to Iron Condor, 45 days to expiration, only standard expirations, 1 standard deviation away, and about a 10 wide, hit go. Bam, right there. All right. Here's another great thing about it for all you folks who, and by the way, this a lot of times, a lot of people don't understand. I make these videos for strictly new people, rookies, and it's very repetitive because every day I get new subscribers. By the way, please, I'd appreciate it if you like what I do. like my channel. At the end of this video, there'll be a link down here. Okay, another plug. All right. I make these videos strict for, I love helping new people see the light, and this is not personally how I personally trade. I do a little bit more advanced, but if you're starting out, this is just perfect for you. Here's what I love about it. See this right here? The standard golden gecko. And with tastyworks, you'll pay $1 to put on a contract and nothing to take off. So that means to put on a standard golden gecko will cost you $4. Okay, before at other places it will cost you, like, I don't know, $6 to put on, but then you got to take off the trade and close the trade. That's $6. $12 round trip. Okay, whoops. That's $12 round trip. Tastyworks, it's $4 to put this on, free to close it. So you're saving a bunch of money. It's 1/3 the cost. All right, this is just amazing. Now, here's the great thing. You can toggle back and forth. You can still adjust your widths up here, your strikes, by doing this. See that? You can do your widths by doing like this. Perfect. You can do your, increase your quantities from one contract. See, I'll toggle the back. See, now it says 2 contracts, 1 contract. You can change the expiration by, see it on there, 50 days. I can go like this. It'll go to the closest one to the normal expiration after that. So you can do that. All right, you can do all kinds of stuff. I don't know why you would do this. You could swap it, like, watch, boom. But now you don't want to do that. But that's just a feature. You can go back and undo stuff from these buttons here. It's just great. Now, one of the greatest features is, now granted it's my demo account, so it should work though. Yeah, okay. Great, right? It'll show you your max profit, max loss, right? See right here? Click that, right? Max profit, max loss, right? Pretty good return on your, look, ROR, return on risk, you're risking $92. It's almost 10% return, right? But here's the best part. See this? P50? They talked about this today, actually. This is your probability of making 50% of your max profit on the trade. Meaning, if you sell this for 80 cents, what are the problems of you closing it and buying it back for half of that, 40 cents, right? 90% chance. When I trade, to be honest, I look for this. I like to have a 90% chance of making 50% of my max profit. All right. Now, I got a question. I actually got an email from a, I guess from a subscriber. Hold on, let me get it for you. Okay, I just received a question this morning, or I think yesterday, from Steve, one of the subscribers. I don't want to show his email. So anyway, Steve asked, "Hi, I was wondering about placing stops on verticals or on condors. I hear some say to place stops at your credit price, but once you get stopped out immediately. I hear others say to place stops at 2 times your credit." If you could, help out with any questions. So yeah, I talked about this in one of my past videos, but I want to cover it again. So Steve, great question. All right, so here's a study that was done ending 2016, beginning of this year. All right, so they did a study on, if you did a 1 standard even strangle going back to 2015 and you deposited $1 million right here, okay, you should combine, let's see, long story short, manage your trade. This is managing at 50, this is holding it to expiration. This is throwing it in the SPY and leaving it there. This is managing at 50%. This is managing when it gets to 21 days expiration. And this is if you did both. So in a nutshell, Steve, look to manage your trade at 50% of max profit, or when it gets to 21 days, whichever comes first. Now this right here is doing a strangle, not an iron condor, but if you're doing a standard golden gecko, it's basically a synthetic strangle. So that's what I would do. And so this is, it still beat the S&P 500 by over 100%, by double. All right, and you would have got the same return using 1/3 less risk, or 1/3 the capital. So again, I covered that in the video. I wanted to cover that again here. It's really simple. So you just manage when you get at 50%, or when that, here, let me just show you. Let me go, here we go. So let's say you put this on, right? 45 days expiration, right? By the way, in 5 days, it's going to be prime time to start putting on trades, even though IB rank is hella low, but that's the most optimum time. That's when this study was done, okay? That's when this study was done. 45 days expiration, and they manage it. As soon as they close it, they put on another one. All right. So what they're trying to tell you is, okay, when do you manage this? Basically, it's too vertical. It's non-condor. It's synthetic, though. It's a synthetic strangle because you're selling the one, buying the two. In fact, I can just push this out here if you want, but the math is better. Oh, yeah, never mind. Okay, so take a look. Here's why I love it. What they're saying is you have the best chance. You have the best chance of making highest return if you manage at 50% of max profit, which is when can you buy this back for 42 cents. All right, you have a 91% chance of being able to do that. All right, now what they're saying is if when this number gets to 21 days left, if you have not received 50% of your max profit, close the trade, win or lose. If you're up a little bit, just close it. Doing that in a strangle is what got these returns versus the SPY double. All right, so I hope that answers your question. Now, so again, here's the tastyworks platform. I use the web-based version. Okay, this is it's perfectly fine. And then they're going to start updating this with more, but this has the same features. You'll like it for used to do. It'll still trade through your tastyworks account. It's perfect. I still use this for charting. Okay, why? Because I just like the visual. I can see where, like, especially if I do my own, if I load my study set that's still custom in here, I do these. I love these. Okay. Oh wait, not that one. Sorry, I got so much in here. Ivy rank only. There we go. Okay. So for example, here's ideal SPY, whatever, everyone uses SPY as the base. So you go. I still love these. All right, because I can see this is a 10-year chart. I can drop it and make it a 6-month chart, and it's very, very easy for me to see where Ivy rank was just back in October. Market interruption. One of my kids is homesick. All right. Anyway, this is why I love this platform, so that I can. There's no crystal ball, and I've been wrong on what I want to happen and what did happen are two different things. So remember how I was talking earlier about I wanted the market to drop. Well, now I got that green arrow. Here's that gray arrow. If you can see it, here's that green arrow. When you see this, like here, my 13-day EMA is crossed above the 21-day, and that's a pretty good upward trend. So that correction I'm hoping for, man, it just didn't happen the way I wanted. Do I still trade? Yes, I just trade smaller because I have a lot of money in cash. And I can do that because I don't manage other people's money. I can stay in cash if I want, but I'm kind of addicted to the action. All right, that's I'll just keep on going since we're doing a market recap here. Basically, what's going on today? IWM, here we go, same thing. Well, IWM is interesting. Green arrow here, gray arrow here, has not turned green yet. Let's look at the other charts. Hold on real quick. Let me load it up for you. There we go. Yeah, but OBV just tells you if there's more buyers and sellers. This is green. It can still go a lot higher. Now watch. If this turns green, for those of you who have my charts, you can pull this up. If this OBV stays green and this turns green when it hits this line, you'll see IWM shoot up. Very much like a good example was here. Green first, then a few days later this went green, and then look what happened. All right, so perfect, right? So what can you do? What does that mean? How can you use that information? Well, you can skew your trade, meaning look here, if you're worried about, and I'll zoom out a little bit, okay, so I'll clear it. If you're worried about it going to the upside and you still want to put on a golden gecko, for example, now this is not what I do. I do a little bit more aggressive, something more advanced, but here's what you can do. Skew it up. What does that mean? Well, if you think IWM is going to shoot up and you still want to put on a trade, see the strikes, just move them up. Watch, click, and it went up this way. It increased the price. See? Okay, and then when I click on this, you'll see the percentages change. See that? I'll go back. This should be 84. This should be 84. That's about 1 standard deviation away. And look what happens is I move the strikes up because we're betting. You're entering your bias into the trade now. What you think. So you could skew it, meaning skew it to the upside. All right, so let me continue here. So what you want to do is you can skew it, meaning skew it to the upside or to the high side. All right. If you want to go back to neutral, you just click the strikes and I'm looking for these two to become closest to 84% as possible. And that's one standard deviation away. This is why I love tastyworks and Dole. All right. And as you can still see here, my chances of collecting 50% of max profit is 87%. If you want that higher, all you gotta do, honestly, is move this. Watch, I can move this out like that. Or there you go, 90%. Now watch this. Better. Let's get this back in a little bit. Something like that. Volatility collapse a little bit, but you can kind of get the gist. If you're worried about screwing up, don't. See, it'll memorize everything, and you can go right back. See? Click on this, and then there you go. Okay? So that's why I love it. That's what I mean about skewing to the upside. If you're bearish and you think it'll go down, do the same thing. You can skew it to the downside by just doing this. There you go. All right. So that's why I use these charts right here. If I do want to enter my bias. Now, usually you don't. You do a lot better just being neutral. All right. But that's the fun of the game. That's why it's so much fun. So a lot of times I like just staying neutral, or to be frank, just do, like, for example, just do half of it. Here's half a golden gecko, right? So you're just doing basically vertical. You're going to sell the 1 standard deviation and you buy the 2 standard deviation, right? Okay, so because as you know, markets tend to go on the upside. If you're worried about being tested on both sides, do this one. Most people can understand that because most people understand making a bet that something will go higher in price. So here you go. Same concept though, right? Here's the best part. $2 to put on, nothing to take off. You can still collect $55, right? Your chance of collecting half of that is 88%. I mean, that's just sick, right? And if you, now you can still skew this to the upside. So go, but Mark, okay, so I think it's going to be higher. So I don't want to sell the calls. I just want to sell one side. But I think it's going to go higher. Can I make more money? Yeah, you can bet that way and skew it this way. So you're going to bring this side closer. You collect more, but you have less play or less chance of error to the downside. Okay, but then you can collect more money. Like, see, remember, look, 90 cents is what you clicked before, but look, 84%, that's pretty good. And your chance of overall, 77%. Okay, so I hope that helps. If you need any help signing up for tastyworks, I'll put a link in this YouTube video down below, and click on that link and it'll take you to tastyworks and you'll be good to go. All right, thanks a lot for watching. Don't forget, if you like to subscribe to my channel, down here at the bottom, just click to subscribe. I really appreciate it if you like what you see. And please, in the comments below, let me know what other videos you'd like me to make. All right, have a great day.